Joining us right now is Andrew Slimmon. He is Senior Portfolio Manager at Morgan Stanley Investment Management. And Andrew, this is a morning where people wake up and they say, ooh, what should we think about this? What do we do?
Right. So, look, my view is that the AI beneficiaries are the sell-off. And I don't think they're expensive, but they're crowded. In other words, it's captured the kind of the zeitgeist of the momentum traders. And when that happens, you're going to have sharp sell-offs like we're having. I'd argue it's healthy. It's good for the markets because ultimately what you don't want to see is so much kind of euphoria that it ends badly. And I suppose that the likelihood that the Fed's gone from for sure cutting to maybe raising, that's probably, caused a little bit of the, kind of the bubble to deflate.
You said you didn't think those AI stocks were expensive, though. If you see a pullback like this, is that an opportunity to buy?
I think so. I think so because the earnings revision story has validated these stocks. These stocks have gone up a lot, but so have their earnings and their earnings revision. So again, the market seems to me, if you look at some of these memory and some of these chip stocks, they're not selling at high multiples because the market is acting rational. It knows that these are very cyclical earnings. That doesn't strike me as like, kind of euphoria when people are acting very irrational. It's market's pricing them appropriately.
What else do you tell people when you look around? I mean, the Kospi down 10%, but we were saying that index is still up more than 94% for the year to date.
Yes. Yeah. So it's healthy. Again, pullbacks like this are healthy. It's what is needed to wash out because there are people that believe in AI, Becky, but there are also people that are just buying the stocks because they're going up.
But it's hard to think that, okay, this is healthy pullback, but you should still buy them when they pull back.
I think so.
Yeah.
I think so.
But that means it made sense at the higher valuations.
Correct.
This pullback doesn't make any sense.
Exactly, but they're crowded, right? So people are buying them not because they believe in AI, but just because they're going up. And when that happens, you're going to have pullbacks like you're seeing.
You've said that the analogies of comparing this to the late 90s when we were watching the dot-com, what we later saw was a bubble, are very appropriate. If that's the case, kind of where are we in that cycle?
I think,
and where are the differences?
Yeah, I think the late 90s were much more difficult because it was almost like, you had the devil on the shoulder and the fairy godmother, the devil saying, you got to participate, and someone on your other shoulder saying, be responsible to your investors.
Because none of those companies had any profits.
Correct.
Yeah.
Today, these stocks that are working, they're having great profits. So I think it's a much easier time to be an investor than the late 90s.
The interesting thing, though, if you look at a Meta or somebody where they are spending a lot of money, all of those big companies that are spending a lot of money, it changes the design, the very design of what these companies are. They used to be very profitable. They used to have no infrastructure spending that went on any of these things.
That's right.
Do you want to continue to see them invest? Is this different because you have to invest to be part of this AI future?
What I find interesting, Becky, is Wall Street is worried they're spending a lot of money.
Yeah.
But you have all the smartest guys in technology land. They're saying the demand for compute is way ahead of supply, and we're going to invest to take advantage of that. So who do you bet on, the smartest guys in technology or Wall Street's obsession with, well, they're spending a lot of money and their free cash flow is going down?
Well, what you have is somebody like a Philippe Lafont who's going to be joining us later this morning, he's buying all out further around that.
What does that say? Yeah. I mean,
they're following the money where those big spenders are going to go. They may not be spending on the big spenders. They're spending on where the money from those big spenders is going to eventually.
I think the point is large language models are becoming a commodity, but the demand for compute is very, very high, and that's what they're trying to take advantage of. So buying land is clearly an endorsement of that idea.
Yeah, and buying the companies that make buying the company, I should say, that makes the machines that make the semiconductors.
Exactly.
So that's what you tell people too?
Exactly. I think that's called the AI beneficiary. So when you get these big sell-offs, I still think it's an opportunity. Now, you can't have a whole portfolio full of them unless you're willing to withstand mornings like today. But I think that's a theme that will continue to work.
So what do you do with the rest of it if your whole portfolio can't be this?
Correct. Well, watch today what works. I bet financials will hang in there. Energy is lower, but I wouldn't be surprised if these stocks don't get hit hard. So you really want to have some what we call non-correlated positions in your portfolio to inoculate yourself. And there are a lot of industries, Becky, that are doing very well beyond just the AI. Look at the financials. They've reported very good numbers, and the stocks have not done all that well as the market has become very focused on the AI beneficiaries.
Is that what you mean when you say this is an easier time to be an investor? I mean, it is when the markets are going up. It's obviously easier.
Oh, yeah, it is easier. But what I mean by that is earnings are up. The revisions are just as strong as the market has moved this year. So the multiple really hasn't moved. So, you know, in this business, look, stocks price what's expected to happen in the future, and companies keep telling us, well, things are better than expected. So it's forced analysts to ratchet up, you know, their outlooks. And that's a very healthy market.
Which tells you that this has how many years left in it or how many quarters left in it? Can you figure it out from this? I mean, it tells you there's a longer life.
Right. The tricky thing is, look, pretty much every quarter going back to the beginning of 2025, the earnings numbers have beaten expectations. And the result is that this year and next year's numbers have gone up a lot. And to draw a line and say this is the end, I'm not smart enough, and I don't think anyone has proven to be smart enough.
No. My guess would be that this tells you there's more room to run. You feel more comfortable.
Right. And if you think about, look, on December 31st of this year, we're going to be pricing off next year's earnings, okay? And next year's earnings started this year, consensus at $357. We're at $395. Well, what happens, Becky, if that number is 410 by next year? That 20 times is...
Do you predict, do you have a base case for where you think the S&P 500 is?
I'm not a strategist, I'm a portfolio manager, but I'm relatively optimistic because of this earnings revision that I see. I think the market will end much higher than it is today, but along the way, we need things like today where we get an unwind in the momentum trade.